The banks that you trust aren't saving your money here, or even here. They're saving in a place that you probably least expect, where it can grow and compound, where it's safe, it's liquid, and it's accessible to them, all tax-free. Imagine if you could have your own personal money vault where your money could do the exact same thing. The biggest banks in the country have been doing this for decades. And guess what? You can do it too. Let's dive in. First, we need to understand something called fractional reserve banking. This is basically how the banks are kind of working behind the scenes, and it's really important to understand so that you know what's happening to the money you're putting into your checking and savings account. Now, a lot of people think when they make these deposits into the bank that the money is just sitting there waiting for them to come and collect it. But that's actually not true. In fact, banks keep a very, very small percentage in what we call their reserves, and the rest of it either gets reinvested or reissued. And by reissue, we mean loans to customers to generate a profit. That is what we call fractional reserve banking. Here's how this used to work not that long ago. If you were to deposit $1,000 into your checking or savings account, the bank would be required to put $100 into their reserve bank, or what we call 10%, and the other $900 could be used to essentially make them more money. Now, that could be through them making loans to new customers or businesses, or just by simply reinvesting it. But essentially, that $1,000 that you deposited into your bank account really isn't there for you anymore. It's now become part of a larger pool of money that is just making the bank more money. Now, this is also why if you need access to a large chunk of cash at one time, you can't just go walking into the bank requesting $100,000 from the nearest teller. You have to let them know in advance, typically about a week in advance, because they don't have the money sitting in the vault ready for you to access. They have to order it, have it delivered on site for you to be able to get your hands on it. But on March 26, 2020, we saw a massive change to the Federal Reserve banking system. The Federal Reserve actually eliminated the reserve requirement on all depository institutions, which includes commercial banks, savings and loan institutions, and credit unions. This change was made as part of the Federal Reserve's shift to an ample reserve system. In this system, the Federal Reserve actually pays interest to banks for having reserves. According to federalreserve.gov, effective for the reserve maintenance period beginning March 26, 2020, the 10% required reserve ratio against net transaction deposits above the low reserve tranche level was reduced to 0%. So what does all this mean? The banks have more money to play with. That is essentially your money. And as we talked about earlier, the bank's number one goal is to make money, and they do that in two different ways, by either reinvesting or reissuing it. Think about it like this. Every time you deposit money into your bank account, the banks aren't just going to let it sit there. They're going to loan it out in the form of a mortgage or a credit card or a student loan or a car payment or a personal loan or a business loan. And they're going to charge you interest to borrow that money, which is essentially how they generate their profit. For every dollar you put into the bank, they can loan it out up to 10 times. This is called the money multiplier effect. So essentially, your $1,000 sitting in your savings account could generate the bank up to $10,000 of profit, when in return, they're going to pay you back somewhere between 0.01 to 0.03% interest on your money. Sound fair? Now you might be left there thinking, well, how much of a bank's profit actually comes from this process? Well, actually a significant part of it comes from this business model. According to the Federal Reserve, anywhere from 60 to 70% of banks' profit actually comes from the interest that they generate on loans. Banks also reinvest this money in places where it's going to earn higher interest. And one of their favorite places to save and build wealth is in a place where it's going to grow safe, earn higher rates of return, and be accessible and liquid to them, all tax-free. And that, my friends, would be life insurance. If we dive into Chapter 2 of Money, Wealth, and Life Insurance by Jake Thompson, while many wealthy individuals maximize the use of cash value life insurance, there is one group that really understands its value. This same sector of the economy controls nearly every aspect of our economy, the banks. Cash value life insurance plays a massive role in financial institutions, more than you could ever imagine. These organizations buy life insurance by the billions and use it for many different reasons. Not only does it increase their financial stability and reduce their taxes, it's an ideal place to fund employee pensions, healthcare costs, and other benefits. It's so common around banks and other corporations that it has its own name. Bank-owned life insurance, or what we call BOLI, and corporate-owned life insurance, or what we call COLI. If you visit this website, usbanklocations.com, you will see a list of all the top banks in America that have billions of dollars in life insurance. This is the top 26 banks that hold at least $1 billion in insurance assets, and rounding out the top 5 is Truist Bank, PNC, JP Morgan Chase, Wells Fargo, and Bank of America. But why would banks put billions of dollars in life insurance? If we go back to Chapter 2 of Money, Wealth, and Life Insurance by Jake Thompson, he says it's not insignificant that banks place billions of dollars in life insurance. It's a reflection of the value they place on this powerful asset. For banks, it provides the ultimate in safety, stability, and growth. More importantly, the FDIC allows it to be classified as Tier 1 capital, which is the safest capital a bank can have. Tier 1 capital is considered to be the core measurement of a bank's financial strength. So here's how they do it. The banks purchase these large life insurance policies on the lives of their key executives. They overfund the cost, and that grows the cash value inside the life insurance policy, all tax deferred. And they have the ability to access money out tax-free on different policy loans, which doesn't trigger a taxable event and also keeps the money inside the policy relatively pretty liquid. Now, this concept has been widely used by some of the wealthiest families in America, and it's known today as the infinite banking concept. You see, this is one of the largest financial secrets in the entire world, but it doesn't have to be kept a secret anymore because you can do it too. You too can become your own bank, leveraging these insurance assets to build and preserve wealth that's accessible to you in the future, all tax-free for anything you or your family might need. It's one of the ways that families like the Rockefellers have been able to sustain and grow their wealth for over 7 generations. You can read about that in this book called What Would the Rockefellers Do by Garrett Gunderson. Back in the day of the Rockefellers, they used a product called whole life insurance because that was all that was available at that time. Since then, the products have evolved and, in my opinion, gotten a little bit better. Today, a lot of times we're using products like Index Universal Life to do this because they have the chance to earn higher interest based on how the cash value grows. Now, I'm not going to dive into that here. I have linked a video above that will tell you a little bit more about how IULs work, and you can also check out the videos that are linked in the description below of this video. Now, don't let this secret just slip out of your hands away like it never existed in the first place. It's time to take some action. If you like what you learned today, I want to challenge you to connect with a licensed life and health insurance agent where you live to see if this concept could make sense for you. The key is they need to be trained on how to design these products correctly. If you live in the US and you'd like to work with me or my team, we've been doing this for over 9 years. We would be happy to have a complimentary consultation with you to see if this could be a good fit. You can click the link in my bio or in the description below to get access to our calendar. And if you know of anyone else that could benefit from this information, please share it with them. If you like this video, please make sure to give us a thumbs up, click that subscribe button, and hit the bell to turn on notifications so you can get notified when my next video comes out because I release a new one every single week. Wouldn't want you to miss it. I'll see you next week on YouTube.